Hi there, welcome to Neppy Invest. It is 4:20 p.m. on a Friday, the 16th of June. Markets have closed for the day, for the weekend as well. So I thought in today's video, instead of doing a daily update, I'll just do a little bit of a weekly wrap up because even though I did do a daily update on Tuesday, I haven't done one for Wednesday, Thursday, Friday. And there have been some interesting announcements released over the last 3 days, including some of the biggest companies on the ASX. We have seen some negative trading updates, some really positive trading updates as well. So I thought I'd go through all the interesting things that have happened over the last 3 days. In fact, the interesting things started on Tuesday evening after I recorded the previous video. Now, first on to the XGO. It has been a really good week on the Australian markets. In fact, the XGO was up every single day this week. In fact, it's been up the last five trading days because it was only 4 trading days this week. So 5 up days in a row, but that means really nothing when you look at this chart. It's still going sideways, unlike the NASDAQ, which is an absolute tear. Really helped by, again, AI. And the Dow Jones, I'll maybe do a technical update on Sunday. So I probably will do a technical update on Sunday. The Dow Jones is right at a very important point, a resistance point at 34,400. If it breaks through that, keeps going higher, that will be fairly bullish. However, in saying that, and one of the reasons why the Dow Jones, NASDAQ, Australian markets are bullish right now is because the Fed has paused raising interest rates. That's not necessarily a good thing. And I'll talk about why in Sunday's technical update video. So let's get back to what's happened during the week. Starting on Tuesday evening, when 2 companies I did mention in the Tuesday video released further information. The first company was AHI. Advanced Health Intelligence. Share price of this company rose 370% in one day. Then they almost immediately went into a pausing halt because that one day was less than 1 minute. And it was really interesting what happened because the share price fell a fair bit in the next few days. So the share price rose a lot. They received a price query from the ASX, and they also went into trading halt because of a capital raising. That capital raising was a $5 million private placement. Now, usually when a company responds to an ASX price query, the first question is all about, do you have any reason? Is there any reason why the share price has increased? Like, have you not released any relevant information, price sensitive information that could explain why the share price has risen a lot in a fairly short period of time? Most companies say no to that question. AHI answered yes, which was really interesting. I haven't seen yes being answered that question often. And they also then had to reply to question 2. If their answer to question 2 or question 1 is yes, then they have to try to explain it. And I think they mentioned something about they were in the throes of doing a capital raising, that sort of thing, and maybe that could explain it. But the market punished AHI after that. Share price plunged 50%. 50% on the Wednesday, another 22.5% on the Thursday, up a little bit today, 6.5%, but the damage has been done. However, because the share price rose 371% on Tuesday, the share price is still significantly higher than it was when it closed last week at 8.5 cents. So it's almost doubled since then. But I just hope people didn't buy on open on the Tuesday at 40 cents because you are significantly down from there. Not the sort of company I would be chasing right now. I'm not going to even have a look at the chart. In fact, have a look at the chart. We'll have a look at the NASDAQ because this company is listed or dual listing. And the NASDAQ chart is just insane. Look at that. 4 trading days, up massive one day, 603% on the Friday. Then we saw down days of up 10% the next day, and then 2 really big down days, down 37.5%, down 41%, and down another 5.7%. But it looks like the down days may be coming to an end. So that's all I'm going to talk about AHI. Don't know even what they do. The other company that released some announcement towards the end of trading on Tuesday was Intelligent Monitoring Group. I sort of poo-pooed this company. I said, they have way too much debt. I'm not going to have a look. Don't care about this company. But they went into trading halt because they were making a strategic acquisition and doing some debt refinancing. And one of the reasons I don't really care about this company is just the amount of debt they had and still have. However, in saying that, this is a really interesting acquisition of a company that is significantly bigger than Intelligent Monitoring Group. The acquisition they have made is a company called, I think it's like, not Tyro, um, starts with T. It's definitely not Tyro, because that would be insane. A company called Tyco, the one letter off. Now, Tyco owns ADT. Now, I know this logo. I've seen this logo around, and ADT is significantly bigger, three times bigger in regards to revenue, four times bigger in regards to EBITDA than Intelligent Monitoring Group. So I'm going to call this a reverse takeover. ADT is making of Intelligent Monitoring Group. Now, because of this takeover and acquisition, whatever you want to call it, the company will be in even more debt. But they are acquiring revenue of $95 million with $65 million of recurring revenue, $80 million debt funding commitment from Tor Investment Management. And they're also doing a $15 million equity raising. Group EBITDA increases from $5.4 million to $24.8 million, targeting $31 million in financial year 24. Forecast EV to EBITDA actually reduces from 8.1 to 3.2. Net debt to EBITDA also reduces from 5.4 to 2.2. Now, there are some concerning things about this. So they will have about $80 million of gross debt, not net debt, because they do have a little bit of cash. The other concerning thing was, if you can find some of the pro forma financials here. So yeah, pro forma revenue, 133.7 million. Pro forma EBITDA, 24.8, forecasting $31 million in financial year 24. Net debt at 66.7 million. EBITDA, 34 million or 24.8 million this year, or pro forma, $31 million for financial year 24. Now, a couple of red flags for me. First red flag is the debt, $80 million of debt. Now, $13.2 million of cash, but I don't like companies with a lot of debt. Now, they also mentioned in the cash flow overview that they are expecting to be $17.9 million of free cash flow. Now, their definition of free cash flow is a lot different than mine, because when you look at the operating cash flow, they're only expecting $3.3 million pro forma for financial year 24. Now, in my opinion, to get free cash flow, you have to take the operating cash flow and then minus any capital expenditure. But what they've done is they've added or included investing and financing cash flows into that to get 17.9 million. So this company won't be that significantly cash flow positive in financial year 24. So my main question moving forward is, how are they going to fund or pay off their debt? $80 million of debt is a lot. So I do have some questions about this acquisition, but in my opinion, Intelligent Monitoring Board, whatever this company is called, Monitoring Group, is a better company now because of this acquisition. And the market agreed with me. Share price up 67% on the back of this acquisition. And even the chart looks more interesting now. So share price of this company has been a downtrend for a long time. Look at that awful looking chart. Go all the way back to 2019. But share price has been going sideways. Has been not floundering, it's going sideways. But the share price after this announcement actually opened above a nice little resistance level at about 17.5, 18 cents, and has remained above that level. Pretty good volume as well. So even though I do have or did find some red flags in regards to this announcement, there are some bullish things for Intelligent Monitoring Group. But again, $80 million of gross debt. Was it $66 million of net debt? That is the main deterrent, in my opinion, against this particular company. Now, spending probably way too much time on low-quality companies. Another company, shall we talk about Auckland International Airport? Because they did have a monthly update and a May 2023 monthly review, that sort of thing. They also revised their dividend policy on the Wednesday, and it doesn't seem like the market cared all that much about it. Share price did dip a little bit, but the main reason I wanted to show you this was just the chart, because this had been a sort of a favored company among a few investors, because this was an infrastructure company. Not many infrastructure companies left because they all seem to be taken over. Share price was in a beautiful, nice uptrend, but that trend has come to an end, looks like, over the past month or so. Share price got to a high of $8.40 and has fallen back a fair bit. And on the back of this announcement on Tuesday, dividend policy or whatever, share price did fall about 3.8%, but in higher volume as well. So it looks like the sentiment in this company has shifted from positive to either neutral or negative. And that's all I'll talk about this company. Next company, CSL, one of the biggest companies on the ASX. And they had a market update, 7:56 a.m., fairly early. Now, this was a negative market update, but you could even say a profit downgrade, maybe. But this is all because of foreign currency headwinds. So, did disappoint the market. Now, they also mentioned here that financial year 24 still expecting NPAT-A to grow 13 to 18% and be around $2.9 to $3 billion at current constant currency. Now, foreign currency headwinds is not the fault of the company. They have no control over that. Well, maybe they do. Maybe they can have some hedging and that sort of thing. But the market didn't like it. Share price did flutter, down 6.9% on the Wednesday, down a further 2.7% on the Thursday, down a further 0.6% today. And the chart looks a little bit less nice, a little bit more ugly. So the share price was in a beautiful, nice uptrend. So I did portray that uptrend by the sloping dashed line. That uptrend started in February last year. And every single time the share price of CSL got to the uptrend, we saw a bounce. But the share price has fallen through that uptrend line. So there is that potential now. Looks like this uptrend in CSL has come to an end. But then what you're going to see is if the share price keeps on falling, say towards $250, you will see value investors taking a position in this company, even though you probably could argue there's no value even at that price. So interesting few days for CSL. In my opinion, it wasn't necessarily a bad announcement, but the market disagreed with me. And the most important thing is the announcement. Now, one of the best performers on the market on Wednesday was a company called Golden Mile Resources. And a lot of the most powerful announcements in terms of price action from the market are lithium companies or mining exploring companies that have bought lithium tenements or projects. So this company released an announcement, the highest ever nickel grades at Quicksilver. Quicksilver is not the clothing company. This is a mining site or a prospective mining site. Highest ever nickel grades, spectacular intersections of 29 meters at 2.34% nickel and 0.109% cobalt. And because I'm talking about it, we already know that the market loved this announcement on the day anyway. I haven't looked to see how the market has since reacted. Share price on the day up 133% and down 8.9% today. Looks like they went into a trading halt. Yeah, trading halt. So why did they go into a trading halt? Proposed capital raising. Not surprising. You see this a lot. When a share price rises like this, a company says, let's go into a trading halt because the share price has risen a lot. We can raise capital at higher prices. See this all the time. So that's all I talk about. Golden Mile Resources, a company I've never heard before. Next company was Aperion. Now, Aperion was really interesting because on the Tuesday, I did notice they released an announcement. The announcement was titled, Aperion to produce titanium components for Ford. I went, wow, that sounds interesting, but the market didn't care about that. In fact, the share price on the Tuesday was flat. No share price. What time was the announcement? 8 a.m. Yeah, so it was before the market had opened. There was no trading on that day, very little trading. And then all of a sudden, the next day, the share price rose 69.5%. And then on the Thursday, the share price dropped 32.9%. So let's have a look at the chart. This is just insane charting. So no reaction from the market the day they released the announcement. Maybe they released another announcement, which I totally missed. On the 15th, Aperion achieves first UL validated 100% recycled titanium. I'm pretty sure that was on the 15th, which was the day the share price dropped a lot. So you can't explain the trading because of that announcement. So really weird, interesting trading with Aperion. Again, just based off these announcements, they're doing something interesting, titanium components, recycled titanium, so something to do with titanium. So I need to look at this company a little bit more closely. Market cap of this company is, let's just move, 142 million according to Trading View. Anyway, I might do a little bit of research on this company in the future. Now, C, Copper Mountain. I did talk about Copper Mountain because their share price fell a lot on the Tuesday, which I didn't understand. So let's actually have a look at, and I'm pretty sure they did get a please explain from the ASX. Yes, they got a please explain response to ASX price query. I did not look at that, but the market liked it because what happened on the Tuesday? So we had the big drop on the Tuesday, 19.5%. And then after that ASX price query reply from Copper Mountain, the share price rose 22.9% and then rose a further 6.6% the next day, and then a further 1.5% the next day. So if you reacted to this big down day for some reason, I still don't know why I was down, you've been totally spooked out because the share price has gone from $2.10 back up to $2.80. So overall, the share price rose 33% in 3 trading days. So hopefully anyone, any listeners, watchers of this video, did not sell out of copper mining on the Tuesday, didn't get freaked out. Market can sometimes do that. They can try to spook holders out of their shares on days like that. So really interesting things happening with Copper Mountain. Another company that had a really good announcement on the Wednesday was Mount Gibson, a company I have owned in the past, and they just had a simple announcement: Koolan Island high-grade shipments increase. Don't have to understand anything to know the market should react nicely to that. Share price up 23.1%. Now, Mount Gibson has been under pressure. The share price has been under pressure simply because of what's been happening with gold prices, but really good volume coming in the last few trading days because of this announcement. So it looks like the bottom might have been reached. And in fact, the bottom was very similar to the bottoms we saw, share price bottom back in November last year. So we can just raise that to there. Yeah, so the time to buy this company might have been towards the bottoms of like a week or so ago at around about 37 to 40 cents. So if you've bought into Mount Gibson because of just little trading signal like that, you've done well because of a good announcement. Really good volume. Always look at volume. Always look at volume. That's how the market is reacting, because you want the market, the big players in the market, to react positively to announcement. And the big players have reacted really well to this particular announcement from Mount Gibson. So if you're keen on iron ore, Mount Gibson could be a company for you. Quickly look at Janison. They, not the share price, but the trading history, extends Naplan online agreement to 2030 in $24 million deal. Now, this company's share price has been under pressure, and maybe this is the end of, not really, has been under pressure. You could say maybe the share price has been going sideways since June last year. Nice little run the share price in October, November, and then a pullback. So nothing to get too excited. Some nice volume on the day. They released that announcement, but I don't care at this point in time about this company. Now, a company that I do own that did release an announcement was IPD Group, financial year 23 earnings guidance. So I was very keen about this announcement, and it was good. To me, it was good. So, they released guidance in regards to EBITDA and EBIT, and pretty good increases. We're talking about maybe a 33% increase in EBITDA, likewise increase, maybe even more than a 50% possible increase in EBIT for financial year 23. But a really interesting reaction from the market, in my opinion. So initially, the share price was up on, I did follow the share price movement of this company on the Wednesday. So initially, the share price was up. In fact, we'll have a look at the chart. And this is one of the best charts on the ASX right now, in my opinion. I might be a little bit, it's not IPD, it's IPG. I am a shareholder, so I'm a little bit biased, but this is a beautiful chart. The only reason I took a position in this company was the chart. And then as I did a little bit more research on this company, I was thinking this could be one of those companies that transitions from low quality, still low quality company, to high quality. The reason I would describe IPD Group as low quality is just because we don't have a lot of history, and they have to prove to us and the market that they can continue to grow for the long term, but this is a good start. Now, what was interesting, as I've mentioned, was just the reaction from the market on the day. So we can actually probably see it just by looking at a 5-minute chart. So we go back to Tuesday here. So in the first 15 minutes, the share price was up. And then there was a lot of selling in the first, from about 10:15 through to 10:25. There's a little bit of selling. You saw the share price drop a lot. And the share price kept on dropping during the day. The share price fell all the way down to about $3.93 at the low at about, we'll say 3 o'clock. But look what happened today. Nice, beautiful increase in share price today. Share price up, in fact, what was it, 6.8%? And that, yeah, that little negative reaction from the market on the Wednesday has been wiped clean. So hopefully you did not sell your shares because you got spooked again. But even if you did get spooked, there's no reason to sell. This was just another little down day among the many down days. But if you just look at the overall trend, it keeps going up, even after some down days. And the share price has almost closed at the high, all-time high for this company. So a company I have owned in my portfolio for a while. I bought somewhere back here, can't remember when. Share price has, I think, tripled from when I bought, almost tripled from when I bought, and no reason to sell out just yet. So even though there was that initial, not initial, because the initial reaction was good because the share price was up, but there was that sort of delayed reaction from the market, which was interesting. A company I will be doing a video on, it's on my list to do, is a company called LGI, another recent listing on the ASX. When I say recent, I'm talking about last year or so. And this company released a trading update as well. And this was another really positive trading update. I've been meaning to do way more research on this because this looks like it's in the right space. I'll talk about what they do here. So LGI operates a portfolio of 25 projects across Australia, generating dispatchable renewable energy and abating carbon to generate revenue through electricity sales, LGCs, and ACCUs, blah, blah, blah. So this is sort of an environmentally friendly company, definitely in the right space. And they keep releasing, maybe not keep releasing, but they did release some really good news on the Wednesday. This was a trading update. We'll call this a profit upgrade. The sort of announcements I am looking for. So underlying EBITDA guidance between 13.9 and 14.5 million, an increase between 5.9% and 10.8% on earlier guidance. So definitely a profit upgrade. So I will take a closer look at this company. Now, one of the things I was paying a little bit closer attention to LGI was just because there was a little bit of weakness in the share price leading up to this announcement. So this company listed on the ASX in October last year. So it hasn't been on the ASX for 1 year yet, but you could just see the share price was in an uptrend, or still is an uptrend, but you can see a little bit of weakness from May of this year. So over the past month, we have seen the share price, did see the share price drop from $2.65 down to about $2.15. And I was wondering why the share price was dropping. Was the market seeing or expecting some negative news from the company? And then after this trading update, the share price has rebounded back up to those levels we saw a month ago. I would like to see the share price of this company get above about $2.70 and remain there. But I think the share price uptrend is still in play. It hasn't been broken, even though the share price did dip a little bit over the past year or over the past month. So I'm going to do a video on this company, and I'm going to do a little bit more research, exactly understand what they're doing, but definitely seems like they are in the right space for the future. Another company, if you like olives, was Cobram Estate Olives. I'm pretty sure they released a crop update. So this is, of course, a company that grows olives. No, I'm no expert in olives. Now, I'm pretty sure I did look at this update. I'm pretty sure it was negative. I'm pretty sure it's negative. I'm not going to go through this, but I'm pretty sure the expected crop is 20 to 25% below our initial forecast. So let's have a look. I haven't actually had a look at this. So the share price down a little bit. So the market must have been expecting some sort of negative reaction from them, or negative announcement from the market, because the share price didn't trade up. But the share price, to be fair, the share price of this company has been or is still in a downtrend. There it is. Anyway, so share price has dropped from over $2 to $1.15. I think the market cap of this company, 494 million, so almost $1 billion when they listed. So what I'd probably do for this company is just wait to see the sentiment in this company just shift from negative, which it is definitely negative right now, to positive. Now on to Thursday. The first company I want to look at is a company I recently did a video on, and that's BioMe Australia. And they did release a pretty good announcement, surpassed a $7 million of sales revenue target. I had a very quick look at this announcement, and I thought, well, let's see how the market reacts. Not necessarily shooting lights out sort of announcement, but I think the market might react well to it. And I'm pretty sure the market did, if I remember correctly, up 16.2%, up another 1.3%. But unfortunately for this company, even though the share price was up a lot, still not convinced because the share price is still moving down. So I'm not convinced by this sort of announcement, but and also the volume wasn't that high either. So the market wasn't convinced either, even though the share price rallied a little bit. Probably more than likely some retail investors getting a little bit excited. Another company, EHL, Emeco, they released a trading update, investor presentation, operational and trading update. I did not have a look at this, but I didn't really have to because the market liked it, up 4.6%. But again, if I see the announcement I like, have a look at the chart, have a look at the reaction from the market, and the chart tells me straight away, no, not even thinking about taking a position in Emeco Holdings. And then we get to DGL. So this is why, perfect example why listening to the market can be a good thing. So this was a company I was a little bit keen on. I thought maybe the trend of the share price was shifting back in February, March of this year. It looks like maybe the sentiment was turning around, but then the sentiment suddenly shifted from possibly turning positive to going back to negative, and that was in April. You can see we had 3 or 4 big down days. So there was a chance maybe a fund manager was getting out, and then the share price just kept on dropping. Fell through a support level. The support level was around $1.30 about a month ago, and then just kept on dropping. And then they released a trading update, and you can just see by the chart, it was a negative trading update. Share price down 17% on that day, and then down another 13.5% today. So let's have a look at DGL. 2 really big down days. And there's no reason to go hunting or buying for shares because 2 big down days on really big volume. That's the other thing to take note. Really big volume. In fact, the volume today was even higher than yesterday. So this could be just some fund managers having a look at the announcement, running their numbers and saying, whoa, this is not good news for DGL. We have to sell our shares, even though share price is down a lot. Now, the announcement itself was negative for a few reasons. It was a profit downgrade, and what they mentioned sort of suggests they don't have much pricing power. So revenue is expected to be where it is, but the EBITDA forecast, underlying EBITDA, which was expected to be between 71.5 and 73.5 million, has been revised downward to be between 64 and 66 million. But it's the reasoning behind it. So they still expected revenue to meet its targets, which is 450 million. However, cost increases inside our operations have eroded margins, particularly within the environmental division, and is a main driver of the revised guidance. So as soon as you see eroded margins, that sort of language, that is telling me this company has no pricing power. Because if they had pricing power, they wouldn't have eroding margins. So keep an eye on DGL. And I had put this onto my watch list. One of my watch lists, which is a watch list where I do look at the company during the week just to see if a bottom is being reached. But ideally, what you want to wait for is no more negative announcements or the first positive announcement from the company, because we just don't know how many more negative announcements has to come from this company, and we don't know how much further share price has to drop. It could fall another 50% from here. It could drop to 40 cents. Now, the market cap of this company is 273 million, maybe even less than that, maybe towards 250 million after today's down day. But it could drop to 100 million. We just don't know. We've seen example upon example of a company releasing a profit downgrade and releasing 2 or 3 more after that. So even though the share price is significantly down from 2 months ago, 3 months ago, the share price has dropped more than 50% from $1.80, which it was in March. It still could fall a lot further. So there would have been some people buying back in March, April this year at $1.80, thinking, oh, it's cheap now. Share price is $1.80. Back in April of the previous year, the share price got as high as $4.50. So $1.80 is cheap. So unfortunately, just because the share price is significantly lower than it was in the past, doesn't necessarily mean the company is cheap. There's more information, new information that has driven the share price down. So this is sort of the be aware sort of situation. I won't say value trap, but be aware of DGL Group right now because of this particular profit downgrade. Now, we had a slew of companies that performed really well on Thursday. Green Tech, share price up 214%, up another 35% today. Why was there a positive reaction from the market? High-grade lithium discovered at Ruthwell Project, lithium company, did really well. Another company that did really well was ERW, Erara Resources. Lithium exploration continues at Andover West. Okay, lithium. Another company that did really well. These are the best performing companies on Thursday. Another company that performed really well was Legacy Iron. What did they release? Hancock executes lithium earning and joint venture, lithium. And the joint venture, I think, was with Hawthorne Resources, if I remember correctly. Hawthorne LCY enter into lithium agreement. So the 4 best performing companies on Thursday, the 15th of June, had to do with lithium. This is the very sign that lithium is still in a bubble. When the market gets really excited just because a company releases an announcement in regards to lithium, particularly if you start to see more and more junior mining companies, mine exploring companies, go into lithium. So they go from being a gold explorer into a lithium explorer. That is a sign that there is still a lithium bubble going on. This is a sign, in my opinion. Now, we'll stay away. Actually, let's have a look at one chart. We'll have a look at GRE. Green Tech Metals. So they had a really big update. When was that? On the 3rd of May, up 164%. And then the share price just tanked. Then they released another good announcement. And even that, further back, on the 16th of June last year, they had announced another announcement, up 146.4%. So in regards to the market reaction of the last 2 days, this is bullish, but I wouldn't be surprised to see the market absolutely go down from here, just because we've seen this in the past with this company. ERW, Irawara. Well, yeah, I wouldn't even think about taking a position in that company. Legacy Iron Ore. So even though this company's mentioned lithium, they've got iron ore in the name of the company. I'd be a little bit more interested in this because the share price has potentially broken out. So just look at that. Last time share price was this high was way back in May of last year. So we're talking about a 1-year high. I do get interested when I see a chart like this because the share price is at a 1-year high and could go higher from here. So compare that to ERW, Irawara. Share price right now is at about 3-month high. So there's a lot of resistance moving forward for this company, even though there was pretty good volume in Hawthorne. So yeah, this is sort of not quite as sort of in between the two. Share price, last time share price was this high was actually back in December last year and then back in April last year. So, and the volume wasn't as good either. So let's stop talking about these lithium companies. Share price could go heaps higher from here or heaps lower because they are speculative stocks. Speculative. In fact, you could even argue most companies are speculative stocks. Well, this is a Canadian company. I don't want to look at a Canadian company. Although in saying that, this chart looks really bullish. AEF. What is this company? I have no idea. Let's go back to AEF. AEFWT. Well, that's not the one I wanted to look at. AEF, Australian Ethical. Well, this is interesting because Australian Ethical Funds, Ethical Investment, had funds under management and business update yesterday. And I wanted to discuss this company because it was a good reaction from the market, up 11.8%. But now the share price is down 9.1% today. So this was this was not a good reaction, not a probably worse, a good delayed reaction from the market. The very fact it was up pretty good yesterday and now down a lot today on even higher volume than yesterday is actually very negative. Now, I am not interested in this company. Just because they have the word ethical in it doesn't mean or necessarily mean they invest in ethical companies, because it's opinion. What they might define as an ethical company, I might define as highly unethical. For instance, Woolworths, I find highly unethical. That's just me. And I have no qualms investing in unethical companies. It's just me also. My problem with these type of companies, ethical funds, is I don't think they're highly ethical themselves. I have heard a few ethical funds speak, and in fact, what some of them do is actually, in my opinion, highly immoral and highly unethical. They actually do promote racism and sexism in itself. That's just my opinion, but this is after I've heard them speak. And they think they're doing the right thing, but they're not doing the right thing, in my opinion. Anyway, we'll go away from that because it was a really negative reaction from the market today. Now, another company was NGI, Navigator Global Investments. I'm glad they didn't go down today. So they had a NGI strategic portfolio transaction announcement. Now, I have not had a look at this, but I did notice the market did like it, up 11.1%. And because it's not down big today, that's finally a good thing. So NGI share price has been dropping a lot recently. Not recently, for a long time, in fact. Let's have a look at the weekly chart. So it's been dropping since 2018 when it reached a high of $6.25. Current share price $1.28. But if we do look at the daily chart, a possible breakout. Now, so what I'll do here, just draw a line at the old high we saw back in January, February. So if it gets above that, that will be a bullish sign. So nice run the share price over the past few weeks, going from $1 to $1.28. So we're talking about 28 to 30% rise in share price in a fairly short period of time. And again, round numbers tend to be fairly strong support levels. We'll put a line there right on $1. And look, it just stays above $1. It works. Technical analysis works because it's all about psychology. And psychology is very important. Round numbers are very important. For some reason, people love round numbers. That's why. Maybe not. That's not why, but this is proof why. And resistance levels are important. Support levels are important. So there might be investors thinking, well, the share price has gone back up to where I bought back here in February of this year. I'm going to sell out now. Hence resistance. So it all works. Now today, so we're getting on to today. We'll talk about one company, Osco Healthcare, up 25%. I didn't expect that. I can see volume. This is the trading history, very low volume. So we're talking about one day, 269 shares. So I don't necessarily call this illiquidly traded, necessarily that, because there's trading almost every day. But 2.2 million shares traded today. So this is what I'm looking for. This is high volume. So why was there interest in this company? They were awarded a $7.4 million contract, largest in its history. So you can see why the market got excited. So let's have a look at the chart. Am I excited about the chart? That's the next thing. Yeah, I could be, although there was a little bit of selling today. We know there was selling because if you look at the one-day candlestick, there is a bit of a shadow above the main body of the candlestick. So share price got as high as 19.5 cents. Share price closed at 17.5 cents. So not the bullish, bullish, not the most bullish one-day candlestick, but it's up there. And the last time the share price was this high, I have to go back forever. Last time the share price was this high for this company was back in 2015. So we're talking about an 8-year high in the share price. So if you look at the weekly chart, this does look interesting. So I probably will put Osco Healthcare to take a look, do some research on this company. I may have looked at this one company once or twice. Another company that might have had a good reaction, Jervois Global, 25%. Okay, phew. Jervois to begin work funded by US Department of Defense. Didn't even have a look at this now, and I thought, ooh, the market might like the very fact that they've mentioned US Department of Defense. But in saying that, this company has Cobalt, all those sort of elements, mines, like somewhere in the Scandinavian countries, they have a working mine there. But look at that. This is the weekly chart, has been dropping like a rock since early 2022 from $1 to less than 10 cents. And even look at the daily chart, it's been dropping. A lot of volume coming in at the most recent negative announcement, which was on the 29th of March. Share price dropped 41.7%. That's almost at the low. Really big volume on that day as well. And in fact, the next day, which was a low, share price has been going sideways. So even though really good volume on this day, share price up 25%, share price is still not at a long-term high. Last time share price was this high was only 2 weeks ago. So even though it was a good announcement in terms of reaction from the market, still share price is in a downtrend. So nice reaction, but share price still going down. Probably also include Mineral Resources. Share price up 3.7%. They had an exploration lithium business update. I did not read this one either. And again, just because a nice little reaction from the market, not necessarily say share price has come out of its downtrend. So share price has moved into a downtrend, about 3 months ago, and has been steadily dropping. It has been having trouble to fall below $68. So share price has reached $68 3 times in the past few months. So there, and there, and we have seen a couple of bounces. So possibly $68, if it gets back there, might be a nice buying price if you like this company. But the share price is in a downtrend. It has performed beautifully well over the last 8 years or so, particularly over the last 3 years. And then let's get to the best performing company, or one of the best performing companies today, and that's AGL. Before we talk about AGL, let's have a look at the announcement the company released. Up 9.7% for a company like AGL. Investor Day, financial year 23 and financial year 24 guidance and dividend policy. So the main thing about this announcement was it a profit upgrade or profit downgrade? And they didn't really mention in the title, they have narrowed its earning ranges. So in fact, it was neither, but they did have a range for EBITDA and profit, fairly big range, but they've narrowed it down to the top of that range, which is a positive for the market. As you've seen from the reaction from the market, they also gave out some guidance for financial year 24, and the company is expecting some pretty good growth in financial year 24 compared to financial year 23. So I think the reaction from the market was that financial year 24 guidance. So if they hit that guidance, that's a good sign for AGL moving forward. Now let's have a look at the chart. Now, remember DGL. So remember DGL. We'll just have a look at DGL first again. So remember DGL was in a downtrend before they released their profit upgrade, or downgrade, I'm sorry. So the market was sort of expecting something negative from this company, and the company gave that negative announcement. So have a listen to what the market is telling you. And the market is telling you something is off when it comes to DGL Group. Now let's talk about AGL before this profit upgrade and a pretty good financial year 24 guidance. Have a look at what the market was telling you before this. The share price was in a beautiful uptrend, and actually, in fact, had increased from $6.80 on the 20th of March to almost $10 the day before this announcement. So share price was in an uptrend. The market was saying positive things about AGL, and then the company released this guidance, and it was positive. The market loved it. Now, again, just like that previous company, which was it, Osco? The one-day candlestick does have a bit of a shadow to the top, which tells us there was a little bit of selling during the day when the share price got above $11. But the next thing to look at is, when was the last time the share price was this high? The last time the share price was this high was way back in 2021. So March 2021, when the share price was in a well-defined downtrend. So possibly the tide has turned around for AGL Energy. Now, I actually am an AGL Energy customer, and more than likely I'm going to change because they have significantly increased their prices and I can get better deals elsewhere. But looks like things are turning around for AGL Energy. In fact, if they significantly raise their prices and they're producing significant profits, that could be an unethical thing to do, particularly because everyone's facing some significant problems, cost of living problems. So keep an eye on that. I wonder if AGL Energy will get any grief if they release significant profits in financial year 24, yet have significantly raised their prices. So keep an eye on that in about a year's time. Maybe not even that long. Well, maybe that long. Anyway, then that's it for today's video. If you have any questions about any companies I've mentioned in today's video, I'm not going to have a look at the best performing companies, worst performing companies today. I had a quick look before I started this video, but nothing too exciting there. So if you have any questions about DGL, AGL, what's the difference between AGL and DGL? It's just A and D, it looks like. I just noticed that right then. I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.